The United States has announced a wave of new tariffs on 60 trading partners, including China, Japan, India, Mexico, Canada, the UK, and the European Union. And they replace a 10% global duty that's set to expire early Friday morning, that is US time.
The Trump administration says the new duties aim to combat forced labor and take effect at 12:01 a.m. New York time. That's just past noon in Singapore and Hong Kong. Now, countries that have laws in place to combat forced labor have been given a 10% rate, while those without such statutes face a 12.5% tariff.
And the full list hasn't been published, but based on this metric, here in Asia, China then faces the higher duty, while India, Pakistan, Indonesia, Malaysia, Sri Lanka, Bangladesh and Cambodia will be given the 10% rate. Taiwan, Japan and South Korea face either the 10 or 12.5% for certain products.
Goods like steel, aluminium, automobiles and parts won't be subject to the new measure as they're covered by separate national security tariffs. Food, agriculture, fertilizer and energy products are exempt.
The move is being seen as yet another strategy to resurrect President Trump's tariff policy after the Supreme Court struck down his Liberation Day levies. And these new duties are being imposed under Section 301 of the U.S. Trade Act of 1974. Once in place, they can remain indefinitely and be unilaterally altered by the president.
With another trade investigation ongoing, the Trump administration is expected to introduce more tariffs in the coming weeks, focused on excess industrial capacity. 16 economies expected to be targeted, including China, Taiwan, India, Japan, South Korea, and also several Southeast Asian countries. Now, these come ahead of a planned visit by Chinese President Xi Jinping to Washington, which Mr. Trump has announced will take place on September 24th. China has expressed strong dissatisfaction, saying the U.S. is making a serious mistake and abusing the Section 301 process. And for more on the latest tariffs by the Trump administration, let's speak with Professor Peter Draper, Executive Director of the Institute of International Trade at the University of Adelaide. Professor, good to see you this morning. Thanks for joining us. I want to start by making sure I get this right. This is not a surprise, not an accident, because this is the Trump administration's workaround against that Supreme Court ruling that deemed, the earlier tariffs illegal. Am I right to say that?
Yes, I think that's correct, and it's pretty well known that that's the case. In essence, the US has targeted the 60 top import partners into the United States, and effectively to replace the 10% tariffs that will expire today, our time, as your inset pointed out. At the end of the day, though, the US is finding what it wants to find, I would say, and maybe we'll unpack a bit of that as the conversation proceeds.
Yes, Professor, beyond the legal workaround, what is the administration really trying to achieve with this latest tariff package?
Well, as your inset noted, it's the first in a two-part installment with a range of other tariffs in the works as well. For example, the 25% tariff on Brazil, the tariffs recently announced on Canada. These are all part of the rolling out of tariffs. There's other investigations underway into Vietnam, for example, a specific Section 301 investigation related to alleged intellectual property rights enforcement, a range of Section 232 tariffs already in place and investigations still underway. But in terms of the headline items, there's this announcement that we're talking about today, and the forthcoming, we don't know when it's going to be announced, new tariffs on a narrow range of trading partners that are accused of practicing excess industrial capacity, as your inset noted. So maybe we can get to that, but for now, the focus is on these so-called forced labor tariffs.
Professor, the latest round of tariffs exempt products like oil, gas, fertilizer, as well as goods covered under the USMCA. Why is that?
Well, that's largely to do with cost of living issues in the United States, as we saw last year when the reciprocal tariffs were rolled back and a lot of exemptions were made after the first set of very stringent announcements, let's just put it that way. The US realized that for a range of items, they either were in short supply or not available at all in the US market, and that was pushing prices up. Industries were complaining, and so they put in place a range of exemptions, which is why the tariff shock for certain Asian economies, and particularly Southeast Asian economies, was not as bad as first predicted. So in essence, they're continuing with that approach. I guess it's a more targeted approach, but it's still a pretty broad brush instrument that they're applying now.
Professor, I want to ask you a little bit about the different sections, that are being used to justify the tariffs. We know the new ones range from 10 to 12.5%, so Washington will likely say there's no real change. But we also know that the previous levy was based on Section 122. The current ones are based on Section 301. Can you just quickly explain how they are different and how are they, or how is the current, if you like, tariff regime going to affect Asia's exporters?
Yes, so the issue with the Section 122 tariffs is that they have only a 6-month validity date, and that's required by the relevant statute that governs it. So that essentially fell out of the Nixon administration and their 10% tariff surcharge imposed in the early 1970s. So that's been in place for 50 years or so, and it's always understood to have a 6-month time limit. The Section 301 tariffs, it's a much more far-reaching instrument and essentially enables the administration to impose targeted tariffs for as long as they want to and on whomever they want to. It could be an entire country, it could just be an industry, it could just be products. So it's a pretty flexible instrument. And provided there is a proper investigation that underpins that. So the USTR, the United States Trade Representative, would say, we've conducted that investigation, but if you actually look at the investigation, they held, for example, 1 day of hearings in Washington. And what one could argue from a due process point of view, that's not a serious process at all. And as a result, there are likely to be court challenges to these tariffs as well. And we'll have to see how that plays out. Yeah. The Section 232 tariffs are again more specific, and they're focused on particular industries or sectors, and the statute requires, again, quite an exhaustive investigation, which is why they take longer to roll out.
Thank you for explaining that to us. So what's the most likely international response then, Professor, to these tariffs, and what does that mean for the global trading system?
Yes, good questions. I think we will see, and bear in mind there are more tariffs to come, and particularly the excess industrial capacity tariffs. I suspect large parts of the world will just shrug and move on and largely accept the tariffs. The real action will take place in the United States with potential court challenges. And of course, there's the midterm elections coming up in November, and that might lead post-November to congressional investigations, blockages, etc. And the US Congress, or potentially a Democrat-led lower house of the Congress more specifically, to look to curtail the president's trade policy-making powers. But that said, the Democrats are not particularly trade-friendly themselves, and we saw that under the Biden administration, which tells me that longer term, these tariffs in some form are probably here to stay. And we also know that the broader geopolitical environment is tenuous, it's deteriorating, and there's a lot of action between the United States and China, which will feed into all of this and probably intensify the frequency and incidence of these tariffs, particularly for non-Chinese countries, because the US and China are in, at least for now, a de-escalation phase. So that raises the stakes for everybody else, I think.
Professor Peter Draper, thank you. Very good of you to speak with us. Executive Director, Institute for International Trade at the University of Adelaide.